Hi, everyone. Today, let's quickly talk about the economic calendar. We had some pretty big developments in markets today, so let's look at the charts. Then we'll look at my results for the day and my positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Moving over to the economic calendar, initial jobless claims slightly higher than expected. The markets didn't really care too much about that. You would have thought this might have sent yields a little bit lower, but it wasn't enough to really move the markets at all. Continuing jobless claims also higher than expectations. Tomorrow we have University of Michigan inflation expectations. This could give us a little bit of a sneak preview on CPI data for next week. Can't forget that comes out on Tuesday of next week. Core CPI, CPI year over year, and core CPI year over year. All of these come out next Tuesday. And of course, this is going to have a huge impact on the markets. So we get a little bit of a sneak preview from University of Michigan. We also have a Fed governor and a Fed president speaking in the afternoon. We also have federal budget deficit tomorrow. Supposedly, it's going to come in at about half of the previous month. Does make sense since they are actually out of money and they've hit the debt ceiling. But we'll see how that plays out. It's definitely something to keep an eye on going forward. Next week, we have the New York Fed inflation expectation. And then, like I said, all of the CPIs that we're watching for on Tuesday. It's going to be a big mover for the markets. And I kind of thought we would stall out until we got to the CPI. It did seem like we were getting kind of close. The markets broke down. So let's take a look at the charts. Moving over to the 1 and the 4 hour here on the S&P 500, you can see we broke that previous low pretty dramatically. So we had this overall double top pattern that was happening. Then we had this shorter term double top pattern that was happening. Both of those midpoints were at a similar level and that broke down. And once that broke, we continued moving significantly lower all the way to that next level of support, potentially at 406.50 or so. Touched that level, got a little bit of rejection into the end of the day. It also coincides with the 55 EMA on the 4 hour chart. Does work out for a pretty good pausing area here on this down move. At this point, this is a reversal of trend in my opinion. You have a solid structure over multiple days. We could not make new highs, and now we have a breakdown of that structure. It's worth noting that we're still in a bullish pattern on the 4 hour. You can see we're still above that 55. We've had multiple tests of the 55 on this run up. You can see a test here. Got fairly close here on 31 January, and then we did get continuations to the upside. So don't celebrate quite yet, but this is definitely a bearish development, breakouts to the downside, breakdowns of structure. At this point, if we do continue down, I'd be looking for a price target of around 404. Definitely a decent level of support. You can see multiple interactions with that level here. And that's also where we kind of took off on this most recent bull run. It also coincides with the 200 SMA on the hourly charts. And that's where I would expect to find at least a short-term bounce. Could certainly bounce right from where we are, come back in, retest this trend line. This is the midpoint trend line of this overall trend that we've been watching. And that also broke down here. So we're definitely moving lower. But you could certainly see a situation where we come in and retest this area. Retest that trend and then get the continuation to the downside. Absolutely a possibility that could happen. That would give you a pretty good entry in my opinion. Obviously, you would want to see the right kind of reaction at the trend line. Wait for that breakdown to start to happen, and then it would give you a pretty good entry, potentially for that 404 level or all the way down to 400. If you look at that longer term trend here, you can see support is going to be all the way down somewhere between 398 and 400. So definitely a long way to go to the downside, potentially, if this structure does continue to break down here. Looking at the indicators here, you can see RSI continuing down. 4 hour RSI broke the 50 level and continued down. Momentum on both MACDs is bearish. Jumping up to the 1 day view here on the right side, you can see momentum ticking to the downside, almost turning negative here. Probably going to turn negative if we do continue down to the 21 EMA on the daily chart, which is sitting very close to that 404 level as well. This does turn negative, then we're looking to see when that RSI hits the 50 level. Are we going to continue down, or are we going to get a short-term bounce back up into that 55 to 60 level? And then the continuation through the 50 until we get to oversold conditions. That'll probably bottom out this move down. Multiple things to watch for here, but definitely looking very bearish, at least for the next few days. Moving over to the NASDAQ on the hour and the 4-hour. Similar thesis here. We got the breakdown of both of those levels. Continued down strongly back to that level of support. Kind of interesting here on the 4-hour. It does look like a breakdown, and it does look like we're going to test that 55 EMA sitting down at 298. It's also worth noting that we did touch the very tip of this extremely tall wick going back to 13 December. That wick went all the way up to $300.80. And that is where we did get down to here. You can see the low of that candle went all the way down to 320 cents. Extremely low, didn't touch the 300 level, so you do have a strong big round number at 300, which is interesting. But it is worth noting that this does look like it broke down on the 4-hour chart. Does look like we're going to test the 55, sitting down at 298 right now on the 4-hour chart. Hourly chart looking a little bit different. This trend line is a little bit tough to place when it comes down to the lower time frames. If you move it up here, more in line with these previous lows, it does kind of look like it broke out. It's hard to place it here. It does kind of look like it stopped right at that level on the hourly chart. Either way, looking very bearish, momentum very bearish. Both charts below the 50 RSI indicating a downtrend. This is already a little bit weaker than we've seen on the NASDAQ. The NASDAQ has been very strong. We haven't tested the 55 before. If we do come down into that level, that could show some weakness. Again, remembering that we do have CPI coming in next week. So if we push down, maybe find a little bit of support, get a bounce into CPI, take out a lot of stops to the upside and get that continuation to the downside, making sure we trap a lot of longs and kick out a lot of shorts before the market ultimately moves in the primary direction. Moving over to the Russell and the Dow, both on the hourly charts, not a lot to add here. You can see the Russell broke down similarly, broke those previous lows, went down quite a bit, all the way to that next level of support, sitting down at 198.90. Basically where I said it was going to happen, 189 to 190. We have that level of support. We didn't quite get to that 189 trend, so it certainly could go a little bit lower here potentially before we get a bounce. But if we're going to bounce, the 200 SMA on the hourly chart is not a bad spot to do it. We're also fairly extended here. We did get into oversold conditions here on the Russell. So a little bit weaker than the other major indices. Certainly could look for a bounce back up to the 9 or 21 EMAs, which would put you back into that 192 area. Certainly could happen. Definitely glad I didn't hold that put overnight yesterday. Closed it right at market close. Could have potentially gotten out of the position early in the pre-market for a little bit less of a loss, but then we really sold off throughout the session. In hindsight, sure, probably could have taken a smaller loss, but most likely would have probably taken a bigger loss if I was holding that into today's session. Otherwise, looking at the Dow here, the structure has not quite broken down. The structure is very different here on the Dow. Let's blow this up here just for a moment. You can see we've kind of been in this sideways holding pattern for quite a while. We're right at the lows. If this does break below these lows, then you definitely would be looking for a move down to maybe 333, 334. Certainly a possibility here. We are below the 200 SMA on the hourly chart, indicating some weakness. But we've gotten below here just a few times already in the recent past. See, we got below pretty significantly here. A couple of bounces through that level here recently. You could certainly get a bounce from here, but does look weak at the current price. Moving over to Apple and Tesla. Man, these stocks have been extremely resilient. You have to give it to them. You can see Tesla posting another green day, gapped up, did sell off a little bit in the mid-session, but still closed well above the previous day's close. Well through those levels, got the classic gap through. Let's change this over to the 1 day and blow that up. You can see right at that level that we talked about, the 202 level, the previous high here and the low, gapped right through that level, classic gap through a wick to the upside here. Is this going to be a gap reversal? Do we gap down and then move down? Certainly possible based on the way that the market is going. But Tesla has been extremely resilient here, ticking up once again on RSI. Momentum continuing to fade here. Does look like a reversal candle, but you just can't seem to count Tesla out yet. Otherwise, looking at Apple, a little bit closer to the markets here, just barely took out some of these wicks, but not all of them. You can see the pre-market here on Tuesday. That wick is still slightly below where we finished. You can see we just barely missed it. We almost threw a wick through that lowest level, pretty much at support here, going back to February. If this level does break down here tomorrow, that's really going to ripple through the markets. Obviously, Apple has a big impact on the markets. It's been very strong here recently, continuing to go higher when other things have been rolling over. And if it does start to break down and we start to look down to that 145 as the next level of support, maybe 146, 145, 146 in that area certainly could be a pretty big impact on the markets as a whole and start to push that momentum to the downside as well. I do want to move over to Alphabet and Meta here just for a moment. You can see Alphabet sold off really dramatically throughout the session, got all the way down to $94 at one point after closing yesterday at $99.50 or so. So pretty big down move. Although it's worth noting that momentum is cooling. We did get to that 200 SMA on the 4-hour chart, almost touching the 144 EMA. So a decent level of support here, and it is pretty extended. Not quite oversold, but pretty extended. You could certainly see a short-term bounce here. And since Alphabet has been leading to the downside, if this does cool here a little bit, that could give markets a little bit of reprieve, just like we talked about on the major indices. Otherwise, looking at Meta, you can see it took out all the lows after this gap up, starting to fill the gaps, at least coming down to the 9 EMA on the daily chart, in my opinion. It's currently sitting at 173.72. So a couple dollars of downside potential, momentum ticking down, RSI ticking down. Little bit of weakness here. Could certainly get below that, maybe down to 170, 169. That would be the next level of support after we took out these previous highs, which we did. So couple of lows being taken out, couple of levels to the downside potentially. But either way, both of these are moving to the downside with a small bounce potential for Google. Moving over to consumer staples and discretionary. Consumer staples continuing to sell off like we thought that it would. Once these EMAs got in order here, we expected this to move down to the downside pretty significantly. We did throw a wick to the upside, test the 21, and then sell off some more, taking out those previous lows. We're now looking to 71.86 for that next level. At that previous low, if we do take out that, then we're going much lower in my opinion, probably down to 71, maybe 70.50 in that next level where we would find some support in my opinion. But either way, this is moving down. The trend is bearish. Looking over at discretionary though, finished basically flat from the previous close, down just a little bit, basically a doji on the day, holding up surprisingly well, which is interesting. Usually if this is going to move down strongly, you would expect discretionary to move down as one of the strongest sectors moving down. But discretionary is holding up fairly well and staples is not. So that's interesting. That could give you an indicator that this is a shorter term move down despite the aggressiveness which we are moving down, and that this could be just a deeper cut into the trend and a continuation. So keep an eye on these here together, watching discretionary here tomorrow. If it does bounce, it could be an indicator that this trend is going to continue and that we're just kind of getting sucked into some shorts here right now. Certainly possible, but keeping an eye on this going forward. Moving over to transports, no big surprise here. It broke down today. We're coming back into this 234 level in my opinion. So a couple more points of downside before we hit that next level of support. Did fill that gap, so it finally happened. And moved down pretty strongly here. Momentum on the 4-hour and the daily both ticking down pretty strongly. RSI got through the 50 level on the 4-hour as well, indicating more bearish price action to come. Could certainly look for a bounce at the 50 level on the RSI here on the daily chart. That's exactly what happened last time. After we got this consolidation period, got the bounce, and then it sent us significantly higher here. So if we do come down and test this previous low, test the 50 level, that could be an area where we do bounce and get a longer term continuation, which is kind of what we were talking about on the last chart. So something to watch, but does look like we're still bearish here in the short term. Moving over to semis, not a lot to say here. The structure is still intact. We did not take out any of the lows. Did throw a wick briefly to the 21 EMA, but this trend is still intact here on the 4-hour. We're still above the daily 9 EMA. So structurally still bullish. Momentum on the 4-hour ticking to the downside a little bit. The structure itself has not broken down quite yet. We're not below 50 on RSI. Momentum on the daily chart is getting pretty close to negative here, probably another 2 days before that happens. We're also still above the trend line. So some bearish indicators here, but overall the trend is still intact and semis still look strong. Moving over to yields. Not a lot to say. We're pretty much in the same area. We did throw a wick through resistance once again, that 450 level. On the 2-year, does look like we're getting a little bit of rejection here. Remember, these do trade a little bit longer, so it's worth watching what this looks like overnight. You can see they do have a couple of bars through the evening here. Certainly could go higher, certainly looking for that breakout if it's going to happen. Either way, still within this range here, not moving majorly in either direction. Probably waiting for the CPI data. Did get a slight uptick in RSI. Moving over to the 10-year, we did get back above that resistance, so we're now creating a little bit of a bull flag type look here, slowly sloping down, but holding in this pattern. But we are above the trend line, could not take out the highs, did throw a wick basically to the highs here. Makes sense why the markets were selling off at the end of the day, but still waiting to see if this is going to break out of this previous range, or if we're just going to kind of go sideways within this range. Nothing says that this has to continue to the upside here. It certainly could stay within this range, and even a slightly elevated yield on both charts could still send the markets lower over time. Moving over to the dollar on the hour and the daily chart here, you can see overnight we pretty much sold off all the way down to the 144 EMA on the hourly chart. And then throughout the session, we basically rallied straight up. So markets moving lower, dollar moving higher. Overall, short-term trend is slightly bearish here. We're stuck at the 55 EMA on the hourly chart. And this does kind of look like a bull flag as well. You can see we're in a range, slowly sloping to the downside after a push higher. If we do kind of break out of this and move higher above this resistance, that could be an indicator that we're going to be moving much higher. But it is worth noting that momentum here on the daily chart did step down. We did test the 9 EMA on the daily chart as well. So we're kind of stuck between these two EMAs at the moment. The 55 on the daily chart does seem to be flattening here, whereas the 9 EMA does seem to be pushing us to the upside. Certainly looking for that breakout overall. In my opinion, we did get back above the 50 level on RSI on the hourly chart as well. So it does look like a bullish pattern. But we do have to watch this momentum on the daily chart. If it does continue to tick down, perhaps we have to get all the way back down to that 102.25 level, find some stronger support, and then get a continuation. Either way, in my opinion, it is going to move higher. Just depends on how at this point. Moving over to J&K, it finally happened. We closed below the 93 level. We closed below all of these previous lows. Breakout here to the downside makes sense. Got that big gap reversal well above previous resistance, trapping in longs. And then we sold off here pretty dramatically, gap reversal to the downside. Looking at the daily chart, you can see we're pretty close to that 55-day EMA. Certainly could act as support at 92.25, 92.26, somewhere in that zone. So a couple of cents worth more of downside potential. We also got down and filled this gap going back to Friday the 6th of January, so filled that gap. We also got down and almost filled this gap from 6th January, so very close on that. Still expect that to get filled. You can see the low here for the day was 92.44, so just a cent or two below where we are. And you can see the close of that day was 92.42, so 2 cents off of filling that gap. Just came up a little bit short. Probably going to get filled. You might even consider it filled depending on how you do gap fills. Either way, could get a short-term bounce off the 55, but we did get that initial breakdown and it does look weak. You should expect we're going to get lower lows over the next few days. Moving over to TLT just for a moment, you can see we gapped up, tested resistance at the 144 EMA. On the hourly chart, got rejected at that level, came down, tested the previous day's lows, and finished basically right there. So we still have a level of support that has now bounced twice. Does look like we're moving slightly higher into the after hours. If we do see this level break down, then we're going to be looking for the next lower level, probably 102.50, another $2 of downside from here. But looking at this candle, it's a very wide-ranging bar compared to what we've been seeing here recently. And it does look very bearish. It's definitely a new close for the day. We're just getting down to that previous day's lowest levels and finding support there. So 104.50, looking for 102.50 as the next level. Moving over to the VIX here, once again, we finally got a breakout. You can see we came back below the trend, gapped down, found some support at the 21 EMA, and then moved significantly higher, moving into that 21 level, retesting the 144 EMA and 200 SMA on the 4-hour chart. That's the 55-day EMA, similar levels. Tested that level, did find a little bit of rejection. Could see a scenario where we sell off a little bit, test this previous high down at 2010 or so, maybe even come all the way down to the trend line at about 1970, and then get the continuation up. But we do have a trend line now. This is a breakout, and this trend is starting to move to the upside. Definitely looks pretty bearish here, despite some of the bullish indicators in the short term that we saw on pretty much the rest of the markets. Looking at RSI, you can see bounced off that 50 level, perfect bounce on the 4-hour. Daily chart coming through the 50 level, giving you that 50-50 buy signal, moving to the upside. Momentum on both charts, very bullish. So overall, VIX moving higher, indicating that markets are likely to be moving lower over the next few days. Moving over to my positions, you can see I took no positions in my IRA. It's hard for me to short in there, so I didn't do it. Moving over to my individual account, I did pick up 2 short covered puts. Probably could have sold a short call spread in my IRA. Probably a good day to do that if it was going to happen, but I just didn't do it, unfortunately. And you can see pretty good profits here. I actually originally sold the 305 put for today, and then the markets just continued moving to the downside pretty aggressively, so I rolled that down and out to the 304 for tomorrow for a $2.65 credit. So my max profit is sitting down at 301.35. So basically right where we are. Markets are bouncing a little bit after hours, got all the way up to 302. So a little bit of a bounce into the after hours. But you can see I do have lots of credit to help cover me to the upside. My break even is all the way up at 306.65 on these puts. I don't think we're going to get that high, but if we do start to rally, I can always close these share positions and allow the puts to expire worthless if we do see a bigger bounce. I don't really think that's going to happen. And if we do see a short-term bounce, I might open up another short put position for tomorrow or maybe the next day, depending on how it's looking. But right now, this is what I have going into tomorrow, and it ended up being around a $500 profit going into tomorrow. Let me know down in the comments section what you think the inflation data is going to come in at next week. Are we going to see a resurgence of inflation, or are we just going to see a steady, continuous tick down? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.